All big things start out small. That was like, that thing sticks in my head, right? Because, think about it this way, a small group of people will raise, from a startup perspective, raise a couple $1,000,000 to go build a FinTech, right? Small team, 3, 4, 5 people, and have to go hunt for a bank partner. Maybe they get one, maybe they don't, right? And so, 2, 3 years in, they're still trying to get this off the ground. On the flip side of that, you have a small institution, so the same sort of team composition when compared to a startup, right? You've got the CEO, you have the executive team, you have the product folks. The only difference is they have a charter, right? Big difference, right? And it's so obvious that sometimes it sounds ridiculous talking about it, but it's so overlooked. And I think this has to do with leadership, right?
Welcome in, everybody. You're listening to Wrestling Payment.
If someone was listening in today and wants to take action, what would you say that first low risk step is that they could take to start kind of breaking down those internal and external silos?
I love that you asked the question because this is exactly where we see, the conversation typically start with the banks as we come in and we look at what the bank is already, doing today. They may be closer than they realize. What we see is that with many of the banks that we partner with that are looking to develop or establish or expand a FinTech program, they're doing something today. In many cases, they could be a merchant acquirer looking to expand into card issuing, or they could be serving some specialty regulatory requirement to market as well. And so they've built some specialty programs. And so our approach is maintaining that comfort zone. The magic happens outside the comfort zone, but at the same time, we start inside of a zone of comfort to identify a workable opportunity that's not too far outside of what the bank is doing today.